Hello, Marc Ostwald from ADM Investor Services International, with some observations about what's been going on in markets, particularly equity markets, and to a certain extent with credit spreads since the election in the United States. So my first chart this week is a very familiar one. It's the comparison between US investment grade corporate credit spreads versus high yield corporate credit spreads. I think the remarkable thing in all of this is the premium that was put in there ahead of the election was very, very modest. And indeed, now we've got to levels in terms of credit spreads on high yield bonds, which basically are pre-COVID-19 levels. That's really quite amazing given the amount of uncertainty that there remains in the world, vaccine or no. The second chart is the VIX volatility index. I think it's just interesting to observe the fact that as much as this put in a lot of risk premium into the VIX ahead of the election, a lot of that has been largely washed out. But it may not necessarily, because it is basically a measure of volatility of the S&P 500, be telling us the whole story about what's actually going on in the underlying, in the broader market, broader US equity market as a whole. For which my third chart, I think, is the interesting one. It's a much shorter term chart. It's a comparison of the performance of the S&P 500 future versus the Dow future versus the NASDAQ future. And as one can see, there is a genuine battle royal going on here, in principle between growth versus value stocks, but also between, and to a certain extent, the growth aspect is represented by sentiment towards the tech sector. But I think that it is really sort of gives us a rather better picture than either the VIX or indeed credit spreads of a good deal of turmoil going on in equity markets and a great deal of uncertainty, which is wholly unsurprising, because as much as a vaccine offers us a lot of hope going forward, there's no doubt about that. I think the problem on the other side of the coin is we're still going to have a very challenging winter. The infection rates are still rising, and we have no real guarantee that when the vaccine starts to be rolled out, that it will be rolled out in sufficient numbers to get people basically, or get activity levels moving again. To wit, the fourth chart today, I think, still remains my bellwether for what's for sentiment towards economic recovery, and that's the oil market. This is the WTI crude oil future, and as one can see, when the vaccine news came through, we certainly got a big boost, but then the reality of the fact that that vaccine probably doesn't impact the market and certainly doesn't improve the economic demand, which needs to, well, the economic recovery, which needs to improve oil demand for quite some time. Now, taking a sort of a slightly lateral move, I moved to Asia simply because I think the developments there, particularly in Japan and China, are well worth looking at. China is clearly suffering at the moment from the fact that there are attacks on its tech sector from the US, and of course the failed Ant-IPO that we had. So the first chart that we've got of the two ones for Asia is comparing the Nikkei 225 versus the CSI 300. And as one can see from the chart, the CSI 300 basically went fairly much knock for knock and slightly outperformed the Nikkei, but latterly it's actually outperformed, the Nikkei has outperformed quite severely as the CSI has retreated on the back of the woes in the banking sector due to defaults, and also the attacks on the tech sector. So there is another factor at play here, and I think that is basically that the yuan has appreciated a lot versus the yen, and that makes basically the yen makes Japanese stocks look quite attractive. And this is my last chart for the day, which is basically looking at dollar yuan, the dollar yen, and indeed yen yuan. Those are the thoughts for this week.